Okay, it's the middle of earnings season here. We're in the thick of it. We had a lot of earnings reports that just came out after the bell. We had AMD, we had Starbucks, we've had Pinterest, we have MicroStrategy, we have Virgin Galactic that's coming out, we have Mosaic that's coming out. So a lot of big names reporting, some pretty decent reactions out of AMD, some not so big reactions out of some of the others. We're going to cover that each one by one. I'll also take your questions. I'll take your stocks that you want me to look at, whatever you want me to look at, just post it in the comments. I'll take a look at it and we'll get through each one of those as long as it takes. Before I forget, make sure to like, subscribe down below so that you can be part of this channel. You can be notified of all the future videos that I do. That's a big help to me, as well as being able to grow this channel in the process. So sorry for the late start. We had a huge lightning strike that probably went off at like 4:29 p.m. that just made a massive noise and took everything down with it. So I had to reboot everything, but nonetheless, we are back on the air. So, all right, let's take a look at AMD. Earnings came out. They reported 58 cents earnings per share. They were expected to have 57 cents earnings per share. Revenue comes in at 5.46 billion versus 5.35 billion expected. So that's a beat on top and bottom line there. Not bad at all. Let's look at what the charts are trying to show us here in the process. So AMD, you got a nice bull flag here that was forming coming into today. It confirmed the pattern for the most part. If we take the earnings reaction out of the equation, it got just above it and then it pulled back just a little bit, leaving traders a little bit on the edge about whether or not it was going to be able to hold that breakout going into tomorrow. Well, with the earnings out now, with the beat, you've got a pretty strong, sizable reaction. It's up about 5-6% off of post-market after hours trading. Some pretty strong volume down here. You can see not a bad reaction at all, especially if this holds. You have a nice bull flag breakout to play with. The problem becomes, where do you put the stop loss at? So there's not a lot of good places for the stop loss. The first one that I would say would be the ideal placement would be below the July 24th lows. The problem with that's at 108.55. You're looking at a $15 stop loss on a $120 stock. That's more than 10%. You're talking like 11-12% stop loss there. With the market being as overbought, and you're looking at things like the fear greed index being extremely in the extreme greed area, it's very hard to justify taking a 11-12% stop loss, much less in any environment, but in one that is as stretched as this, to expect that, okay, is there really going to be another 22% of upside for AMD going forward? I don't really quite see that. So that's why I wouldn't take that. Also, in any market, when you're starting to get into these 10, 11, 12, 15% stop losses, you're expecting massive moves to incur. That makes it to where getting a 2-to-1 return on your capital is much more difficult. That's why you see me so oftentimes, I'm looking at stop losses that are like 3-4%, because 8% is actually not all that crazy of a return to get on a trade, especially if you can get a quick short-term swing out of that trade. But when you start going for like the 30%, the consistency behind that becomes much more difficult. So with AMD, trying to chase it at 123 is very much a problem. If it can come back down, test this 117 area, that becomes a little bit more manageable. Now you're starting to talk about 5-6% of a stop loss. Now you may say to yourself, well, Ryan, why don't you just raise the stop loss a little bit higher? Don't put it all the way down below the lows from the 24th. That's a valid argument. But really the only other place that I could see myself putting it at would be below 112.35, which would be the lows from yesterday. So that wouldn't be as good of a stop loss either. I think it would be much easier for that to get taken out on any kind of a pullback that's very susceptible, because it just takes it back into this bull flag range where there's not a lot of support at this area. It just happens to be the days. Not really what I would say a support level with heavy conviction there. So at this point, AMD, do I want to chase it at this level? No, I'm not chasing it. So it's very difficult from a reward risk standpoint to just right after hours price action, but just not something I would want to chase at those levels. The next one, we have Starbucks that came out. Starbucks also reported pretty good earnings, mainly in line. You had $1 earnings per share. Expected was 95 cents, 928 or $9.28 billion in revenue, and that was essentially what was expected, 9.28 billion. So everything was pretty much in line, except for the earnings per share came in a little bit on the hot side. So that helps it out as well. But let's look at the chart on SBUX and see what we got from a post earnings reaction. So right here, not anything big. Initially, it had to sell off, but then it came right back up and kind of normalized the overall swings of the post market trading. Going into it, you can see it was only down 0.31%. Now, with earnings out, it's down 1%. So it's not been what you would call a heavy sell-off. I was actually in the stock up until Thursday of last week. I went ahead and sold it when the market started acting all hokey. This is why I got out of the stock here. Originally, I got in because it was breaking out. That looked promising to me last week. And so it started to break out. Looked like it had the momentum on its side, and then it just gave it all up. And then at this point, we're getting this double bottom basing pattern failed to hold the breakout, and it starts to drift lower. That was a no-go for me. It breaks below the 200-day moving average. Didn't like that as well because it had shown that level to be some support in recent days. This white line right here, that's the 200-day. So enough reason for me to go ahead and get out. Hasn't done anything since. In fact, it's trading lower than where I got out of it now with the earnings that just came out. Also, a reason why I got out of it is I don't want to hold the stock through earnings. I don't care if it's Starbucks, Walmart, or if it's AMD or some other stock that might have a lot of volatility. Trying to hold a stock through earnings puts a lot of risk on the table that you don't need to take on. So if Starbucks was to turn things around and start to break back up to the upside, maybe it gets up to like 102.60 or so, that would provide a possible opportunity to get back long on the stock and maybe have it with a good entry price or with a good stop loss. But right now, it's trading below this resistance level. It's also got some support that goes all the way back here. It goes all the way back to December of last year. That has held up pretty well. You only had this one little outlier here that happened in early July where it broke below, but within 2 days, it was back above it with vengeance. So you got support below, you got resistance above. It's essentially stuck in a sideways trading pattern until it can resolve the support resistance issue here that it's stuck between. It needs to break back above that 102.60 and preferably needs to get into the upper 103s to really get excited about this stock again. All right, so we talked about AMD, we've talked about Starbucks. What else do we have? We have Pinterest that just reported earnings as well. Pinterest at $708 million in revenue versus $699.4 million expected. EPS was 21 cents versus 11 cents expected. That's actually pretty good. That was a pretty good move. However, what did the earnings say about it? It doesn't like what it saw out of the earnings. So this is a channel that it's been trading in for quite some time now. I've been following this channel, and what's interesting, we take the post-market earnings reaction out of the equation. This is what we had coming into today. Slight uptrend in it going all the way back to July of last year. So a solid year-long trend that we have in place. However, it wasn't anything that I would say was aggressive, and it's actually had some pretty significant gaps to the downside. You had this big one here at the last earnings report that came out. Huge gap, but it did get filled, so that was a positive for the stock. But now, with earnings out again, you didn't get as much of a reaction as you did back in late April of last year, but you did still get a pretty good sized reaction. It's down 3.5%. And what's more interesting is the fact that post earnings, you saw price go all the way up to this upper channel band here before it immediately sold off thereafter. So some pretty big swings there. I don't see a clear edge with Pinterest at all in this situation. I don't see anything that would say, let's go ahead and buy it right here. Starbucks, there was some caveats there. If it can break out of that resistance and push higher, yes, it becomes more of a buying opportunity. But with Pinterest, I don't see it. If it pulls back over the course of the next few weeks or months back to this lower level at like 22, yeah, that would happen. But that's not in the here and now. That may never happen anytime soon. So it doesn't make sense for us to like try to say that's the game plan going forward. Wait for it to pull back to a rising trend line that's more than 20% away from being hit, about 25% actually. So right now I would want to see, okay, how does the conference call go? Does the setup unfold in the next like 2-3 weeks maybe, or longer, that would give you a good opportunity to get long on it? Because right now I don't see it with this price action, especially what we have seen of late. So not a lot going on with Pinterest that I think is worth taking a stab at. But you also have MicroStrategy. They reported after earnings as well. Let's take a look at what they're doing, and we can go from there. Revenue came in at 120.4 versus 126.03 expected. So that was a miss on the revenue side. Earnings per share came in at 2.35 versus 71 cents expected. So that was a huge beat. Kind of an odd one there. Post market, not seeing a lot of craziness out of the stock. So it finished the day down 0.6%. Now it's only down 1.69%. So it just added 1% to the downside. But what I do see on this chart, and this is something that could be valid even for tomorrow, assuming that it just doesn't have an absolute massive sell-off once the conference call starts. If it's already started, I'm not sure. But you got a really nice bull flag there. Really nice bull flag. We'll give this a different color here, like purple. But really, really solid textbook bull flag pattern. You got a little bit of an outlier here on an intraday basis, but I really care about that close and all the closing prices are inside of this bull flag pattern. So if it breaks above in the coming days, above this 445 level, that becomes a good opportunity for me to get long on. Now, stop loss becomes a little bit more tricky. So we talked about 445 being the entry price, and then we got 416 being the stop loss. What are we talking about there from a stop loss standpoint there? I can't do the math in my head. Definitely not on there. Talking about 6.6%. So then you need about a 13% return to justify that trade. It's possible that you could get 13%. I don't think it's as wild as taking on AMD. So if I had to choose between MSTR and AMD, I would go with MSTR because it's a tighter stop loss, better chance that I can get a 2-to-1 return for my capital at least. May even be that depending on how it reacts to tomorrow, it may be that these lows don't get revisited during regular trading hours. So as a result, probably would be moving it up some even more below 424. Let's see if it goes. Yeah, I'd probably do like 424. So if we talk about 424, that's a different picture there versus the 415 or whatever I was talking about there. It becomes 4.8%. So that becomes even much more desirable from a trading standpoint. So I'd be watching MSTR instead of AMD. A lot of people have their eyes on AMD. There's a good chance that people are going to see a reversal in that one because it's such a crowded stock in general. Just the retail crowd loves that thing. All right, so that's the stocks that I wanted to cover today. Again, make sure to like and subscribe to this channel. Love to have you guys here. I see I've got a couple of questions here, so we'll cover those, and then we'll wrap it up after you guys are done with the questions. First one, can I check the DAVA tech charts? Yes, I can, from Crypto Nix. Thank you for being on. Move my head up a little bit here so you guys can see the question. DAVA. So we got a software company. One of the things that I would say should be a little bit of a concern for a stock like DAVA. I don't know a lot of the backstory on it, but you look at software stocks. This is software infrastructure. So if we go by and look at that particular sector or industry, first the sector is the technology. Then we want to find software infrastructure. Look what this thing has done so far this year in 2023. It's gone from 82 to 120. So it's about a 50% move in a lot of your software stocks and in the industry as a whole. Now let's go back to what we were just talking about here. Where is that at here? There we go. DAVA. This stock doesn't look like it's done very well so far this year. We're talking about a stock that's gone from 75 to 51. That's about a third of its value that has gone down. That's not a good sign. So you're seeing a stock that it's in a very good sector, a very good industry, but it's not doing well on a standalone basis. It's actually struggling quite a bit. It continues to sell off when the market was actually going up. So from a technical standpoint, what do I see here? You do have a rising trend line off of these June lows. Doesn't look like it's doing a good job of holding there. I don't know if that was when its earnings comes up. It looks like it might have already reported them. I don't know. 926. I don't know when the last time it was. I'm guessing sometime in June, but it did not hold that rising trend line from Thursday when you had a pretty good size market sell-off. And now it looks like you're almost consolidating a little bit in a bear flag pattern. So I definitely don't like the looks of this chart here. Apologize for the the mesh of lines there that's going in there. There we go. All right. The big thing is that I remembered to turn on my charts so that you guys weren't flying blind this week. But yeah, a little bit of a bear flag pattern. They're very young in that development stage, but just wanted to make you aware of that. But the bigger part is that it broke that rising trend line. It's also not trending higher with software stocks as a whole. That should be a big red flag. Some of the support here from back on at the 54 level, that's also broken. So yeah, I'm not really seeing much to get excited about on DAVA. And in order for me to maybe get a little bit more optimistic about the stock, I don't know. But this one looks rough. I think maybe it would have to get back above that level right there. The big move, it would have to get back above 60. So you're talking about like a 20% move, some consolidation to be able to make it a good reward risk scenario. I'm telling you, trading's hard, man. It's hard to find a good stock in a good sector in a good industry while the market's trending higher with a good reward to risk ratio. Very, very difficult, and one that doesn't carry a whole bunch of headline risk either. Emmanuel, PLTR and PFE, please. Apple, Meta, and Microsoft all going to all-time highs. Take profits. Yeah, they're all there. I don't think Meta's there. Meta's got a little ways to go, but it did close a major gap. PLTR and PFE, yeah, we can look at that. I actually have some thoughts on PFE. I was just charting this one earlier today, but PLTR, another big crowd favorite right now. You're getting into a point where it's getting really overstretched. You're talking about since May, it's gone up about 200% or close to it. Now you got a lot of overhead supply that could be an issue for this stock as it gets closer and closer to this area right in here. There's a lot of potential profit taking that could take place. People who bought in this area, they rode it all the way down from the mid to lower 20s all the way down to $5, and now it's back up there, and they're like, I just want to get out of this thing. So they're going to have to eat their way through some supply here. There's a lot of heavy volume, and that could be a little bit of an issue for PLTR going forward. At this point, would I buy it? Absolutely not. I mean, the big part of trading, and again, I talk about how sometimes frustrating and difficult trading can be, is to get the charts like these, you got to get them earlier. I always talk about getting into the meat and potatoes, not necessarily having to time the exact bottom of the stock. Like, you don't have to get in right down here from the December lows, but if you're going to have confidence in the stock, or if you like the charting pattern, you would have needed to have gone in somewhere around here, around this like 980 mark, back when late May, mid-May, where it started to break out. I didn't like the chart necessarily. I didn't think that was really a quality trade setup necessarily, but I would have taken about a 9%, 10% stop loss on it, and that was a little bit outside of my range. Hindsight, that would have worked out great still, but if I'm being honest with myself and I'm being trading what I'm capable of trading, this is one that wouldn't have met my criteria. But you got a rising trend line here. That one got broken. It's kind of flattening. So you got this one now that it's working with. It's really crazy to try to play these things, hoping that they're going to go up another 100 or 200%. Just don't have any guarantees of that. And the stop loss becomes so extremely wide. I mean, let's say you got in at $20, right? Where would you put the stop loss at? 15.88? Yeah, that's not going to work. That's a 25% stop loss. People will do it. People will do it all the time, but it doesn't make it a good trade setup and something that's very dangerous. PFE, though, let's look at this one. PFE, what I want to look at here is this long-term trend line. This goes all the way back to 09 lows. It's bounced off of it here in 2010, came back down to it in 2020 when everything shut down, bounced off of it there. You've seen, it benefit from that whole shutdown, going all the way to 61. Now it's coming back down to 65 as things go back to normal, getting back to where it used to be trading at. At this point, if I'm looking at it from a weekly standpoint, this long-term trend line becomes what's most important. I would be looking at it from a $31. If I'm looking at it from a long-term investment, I would want to see it come back down to $31, test that trend line and hold. At that point, I feel like I'm getting a good value for the trade, because here, I mean, what's the edge right now? Because there's no real support underneath the stock. In fact, if you look at it from a daily standpoint, it's just still putting in lower lows and lower highs. That's not a good thing either. But yeah, if I'm an Apple, Microsoft, Meta, I've taken some profits in Microsoft lately, and I didn't have any Apple or Meta, but Microsoft, I took some profits in. I took some profits in Amazon. I just wanted to get lower my exposure some to those because they made such incredible runs off the lows. I wasn't expecting that for my long-term position holds, but could they keep going higher? Yeah, I mean, Apple is yet to even break its rising trend line here off of the January lows. I mean, that's an incredible trend, maybe like a Hall of Fame kind of a trend line. I mean, that thing has been incredible, but I think taking profits is a personal thing that a lot of people have to decide for themselves. I think a lot of people get much more emotional when they have a lot of profits in their portfolio. There's much more bigger swings when it drops 1 or 2%. And so they can be much more likely to make a bad decision, rather a good decision. So you got to make sure that you're in tune with what your risk profile is. Can you stomach a large position in Apple or any of these things for that matter? Tesla, yes. But Tesla had its earnings come out. It wasn't, anything that the market loved. It sold off pretty hard there with Netflix. So with Tesla, you have this gap that's unfilled right here still. You have this massive resistance level. This resistance level I've been highlighting, I guess now for over a year, because the previous test of it was back in April of 2022. So I've been talking about this resistance level for a long time. When earnings hit, I mean, it was trading all the way up here. The next day it's opening down here. So this resistance level played out perfectly again. It should be on your radar going forward, that resistance level and the importance that it has with this stock. So right now, I actually think there's a potential for this stock to actually do something going forward. It's not at that point yet. I mean, today it's down 2.4%. That's not what you need out of the stock. I traded this thing right up until earnings. I think it was the day before I got out of it. Made, I think, 4.7% on the trade. That was a fun trade. But right now, I don't see any way to get in it at this point in time. What it needs to do is continue to form this base without violating the lows from July 24th. If it can do that and just continue to trade sideways and then finally break out, let's say like above 275, then there's a good play there to be had. Yeah, and it's okay to be super bearish about Tesla. And the reason why, I'll tell you why I think it's okay to be bearish about Tesla is the fact that this could break to the downside and fill this gap. And if that happens, then you got this big old support level here that could come in play right there. So right now, I think that there's an opportunity for it to break above that 275. But even if it does that, you still have this massive resistance level. So you've got to find a stop loss that's going to be tight enough to be able to justify the fact that it may only get up to 296 and then start to pull back. And if it does that, you want to be walking away with at least enough to justify the risk that you took on the trade. So Tesla, if it breaks below those July 24th lows, I would say, yeah, I would be bearish on that at that point. So in any case, good show. Good talking to you guys. Usually it goes for about 30 minutes here. I'll answer as many questions as you guys have, but always like being able to catch up with y'all, tell you some stuff that's going on in the market right now. Right now, we're hitting a peak earnings season. So we'll also on the Thursday show, I'll be talking about the Amazon Apple earnings. I think Apple comes out at like 4:30, so it'll be right when the show starts. So we'll be doing that one on the fly. But overall, be interesting to see how stocks like AMD plays out here. Does it start to give back some of those gains as the evening wears on, or in the pre-market tomorrow? We'll trade another day to find out, guys. So if you enjoyed this live stream, make sure to subscribe to the channel, Share Planners channel. Also, make sure to click the join button down below if you want more of this market research that I do each and every day for members. You can get all of my market analysis, big tech analysis. You're also getting watch lists from a weekly bullish and bearish master watch list and daily watch lists and different ideas that I come across each day. So check that out by clicking the join button down below on YouTube. Thank you guys, and God bless.